Hello and welcome to another video on my YouTube channel. My name is Joris and today I am here with the annual update on the Swiss Dividend ETFs. So it's the edition of 2026 and it's right on time because there are a few ETFs that will start paying out a dividend in February already. So let's jump into it. You have 14 ETFs on the SIX stock exchange and 11 of those 14 ETFs, they are only noted on the SIX stock exchange and they are not UCITS ETF. So they are only for Swiss investors. Sadly enough, European Union investors can't buy these kind of ETFs. But there are 3 ETFs on European stock markets. They are given in black when I go over them, and the other ones they are in yellow. So they are based in Germany or in Luxembourg, and those 3 ETFs you as a European investor you can buy as well. And for Swiss investors it's actually the best to buy one of the 11 ETFs that are only noted on the SIX stock exchange. Okay, you can also go for the German one. That's also relatively good tax-wise, but the Luxembourg ones, they are not that ideal for Swiss investors. And if you want to know more about that, you have to do your own research. I'm not going to go into that right now, but maybe I will do that in a next video. And now I'm going to go over the indexes which the ETFs are actually following. So the first index is the SMI. It's the Swiss Market Index, which follows the 20 largest companies on the SIX stock exchange. So it's company 1 till 20 on the SIX stock exchange. Then you have the SLI, the Swiss Leader Index, which follows the 30 largest companies on the SIX stock exchange. So it's company 1 till 30. Then you have the SMIM, the next 30 largest companies after the SMI on the SIX. So it's then company 21 till 50. Then you have the SPI, which actually covers almost all the stocks that are on the SIX. And I believe that following the SMI, the SLI, or the SPI is actually the best if you want to follow the Swiss market. Following the SMIM, so mid caps, actually more mid caps, it's not the ideal thing to do. The SPI Mid is also an index like that, so it follows the mid caps, the 80 stocks that are depicted as mid caps here in Switzerland, and that's the 110 largest stocks minus the 30 from the SLI. So it's actually company 31 till 110 on the Swiss stock exchange. But I'm not a big fan of that because, a company that is growing fast, it will go from the small caps to the mid caps, and then it will go to the Swiss Leader Index or the Swiss Market Index, and then it's no longer in your index. So you miss the future growth of that stock then. Okay, you have the other way around when a stock from the SLI and the SMI is starting to diminishing growth and it gets smaller and smaller. It will drop into the mid caps, and then you take along till it falls to the small caps the loss of that stock. I'm not a big fan of that. I like actually investing towards the whole market or the top of the market. But for some people, they like investing like that. So who am I to not include those ETFs in my overview? So I will talk about 3 ETFs that follow the SMI, 3 that follow the SLI, 1 that follows the SMIM index, 2 that follow the SPI index, and 1 that follows the SPI Mid index. And then there are 4 other indexes that I'm going to present 1 ETF of each of, and it's the SPI ESG. It's the Swiss Performance Index combined with ESG principles. That's a new one for this year, and because last year there were only 12 ETFs when I made this video, and now there are 14, and this is one of the new ones. So the ESG principles, you know that it's the environmental, social and governance factors that are taken into account to evaluate the companies and see whether or not they get into the index, yes or no. Then you have the SPI Select Dividend ETF. You know that this is the index that the CHDVD ETF is following, and that's the ETF that my wife and I are buying for our kids. So we really like this ETF, and it follows the 20 stocks from the SPI with the best dividend parameters. If you want to know what those are, you need to read the information document of the ETF, and it's from iShares, so you will definitely know where you can find that then on their website. Then you have the MSCI Switzerland EMI, so IMI High Dividend Yield Index. That actually so this ETF actually changed name the past year. It used to be an ESG focused ETF, but that's gone, and now it is called the MSCI Swiss Dividend ETF. But it's actually investing towards large and mid caps and small caps with high dividend criteria. So more or less the same as the SPI Select Dividend, but here there are 19 stocks, and in the SPI Select Dividend there are now 20 stocks. And in the SPI Select Dividend, they don't really talk about the high yield dividend criteria, but they really mention it, the best dividend parameters. So I like that more than seeing high yield in the name. But yeah, it's what's in the name. And then you have the final index, where I'm going to present one ETF of, and that's also a new one for this video and this year. So it came into the market in 2025, and it is following the ESGen index SDG Switzerland index. And so you have the ESG principles, and then on top of that the SDG principles, and those are the 17 sustainable development goals from the United Nations. So if you really like investing towards sustainable companies, and yeah, then I think this is absolutely one of the best ETFs that you can invest towards. Unfortunately, because it's a really young one and there is not a lot of money invested towards this one, you don't know yet whether or not it's going to perform well or not. But yeah, you will see in about 2 or 3 years how it performed in the past 3 years, and then when I make my update video, you will see whether or not it was already a good decision to buy it right now or later. And as said already, I'm going to present one ETF of each of these indexes. And then we can go to the first one that follows the SMI index. It's the SMICHA from UBS. It has a total expense ratio of 0.20%. You can always find the ISIN code here. It's always noted on the SIX stock exchange in Swiss francs, so you can buy one ETF for 134.36 Swiss francs. The dividend is also going to be paid out in Swiss francs on the SIX stock exchange. Sometimes in Europe it's going to be in euro, and you can even buy then the ETF in euro sometimes, but you need to check that yourself. I follow the SIX stock exchange, so I have all the prices here now in Swiss francs, and also the performance is in Swiss francs. So there are 20 companies which this ETFs invest towards, and there is 3.2 billion invested into this fully replicated ETF. The past year it is up 7.4%, the past 3 years it is up 24.6%, and in the past 5 years it is up 36.7%. and it paid out 4 dividends per year. Actually, it's 5, but in September sometimes, or in July sometimes, you have one day on which a lot of ETFs that I'm going to go over today pay out 2 dividends. So you get 2 dividend payments, but it's on the same day, and that's why I always say that it's 4 dividends per year, but actually it's going to be 5 documents that you will receive and 5 dividends that you will receive, but the last 2 ones are actually on the same day. So this one is going to pay out in March, April and September, and here you can see the past dividends from 2025, and there the dividend yield is now 2.70%. And one of our viewers, so one of my viewers, he commented on one of my videos and said, hey, it would be nice if you can give the 5-year dividend CAGR or the 10-year dividend CAGR. So I did just that for the dividend for the ETFs, where I had the information of the past 6 years of dividends. So I calculated the 5-year dividend CAGR, and for doing this, so the 5-year dividend CAGR, the calculation, I calculated the 2025 dividend compared to the dividend of 2020, because then you really have 5 years that pass and you really know what the average growth rate of the dividend is. And in this case, for the SMICHA of UBS, it's 4.24%, which isn't bad at all. Then we can go to the second ETF that follows the SMI index, and that's the CSSMI from iShares. Total expense ratio of 0.35%. You can buy one share for 136.76 Swiss francs. It invests towards 20 companies, and there is 2.3 billion invested into this ETF, fully replicated type as well. The past 1 year it is up 6.36%, the past 3 years it is up 23.55%, and the past 5 years it is up 35.5%. This ETF paid out 6 dividends per year last year, and it did so in March, April and July. Sometimes it also pays out in September, but this wasn't the case in 2025. And the dividend yield was 2.56% last year, or with the dividends of last year and this price, you have a current dividend yield of 2.56%. And the dividend CAGR for the past years comes down to 3.98%. And just like with the previous ETF, where you also saw an ever increasing dividend, so no declines whatsoever with the previous one and this one. So really nice to see that, and a dividend CAGR of about 4% isn't bad at all. Then we have the third and last one that follows the SMI index. So it's the XSMI from Xtrackers, and it's the Swiss large cap UCITS ETF. The total expense ratio is 0.30%. It's a Luxembourg-based one, so it's in black. So European Union investors can also invest towards this one. And you can buy one share for 135.72 Swiss francs. It invests also towards 20 companies, and there is 1.5 billion invested towards this fully replicated type ETF. In the past year, it is up 7.34%. The past 3 years, it is up 21.4% almost. And in the past 5 years, it is up 33.38%. It pays out only one dividend per year, and it's in August that it pays out that dividend. And the dividend for the current dividend yield with the dividend that it paid out in 2025 is 1.55%. And here you can see the past 6 years of dividend payments, and the 5-year dividend CAGR comes down to 4.85%. Here in 2022 and in 2024 you see a slight decline, but yeah, it's not always the the case that it's going to go up. And you can also buy this one abroad, and there, yeah, you have the euro that plays along as well, so people invest towards it in euro. The Xtrackers, the provider, needs to convert the euros to Swiss francs, and then when the euros are being paid out from Swiss francs to euros, this has an influence on this yield a bit. So yeah, it fluctuates, but still the dividend CAGR is 4.85%, which is the highest that we've seen so far. Then we can go to the index, the ETF that follows the SLI index, and that's the SLICHA with a total expense ratio of 0.20%. You have one share for 280.40 Swiss francs, and there are 30 holdings into the SLI index, so it also invests towards the 30 companies that are in the SLI index. There is 1.8 billion invested towards this fully replicated ETF, and the past year it is up 4.81%. The past 3 years it is up 27.5%, and the past 5 years it is up 38.39%. It pays out 4 dividends per year in March, April, and September, and the current dividend yield for this ETF is 2.52%. And the 5-year dividend CAGR is 5.34%. So we are slowly climbing with our dividend CAGR here, and having a dividend CAGR of 5.34% isn't bad at all, but the 1-year performance is actually not that great. So most of the performance for the past year comes actually from the dividend that was paid out. Then we can go to the second one that follows the SLI index, and that's the Xtrackers SLI UCITS ETF 1D with a total expense ratio of 0.25%. The XSLI, you can buy one share for 221.65 Swiss francs, and this one actually is noted on the Xetra in euro and also pays out in euro, so you have there the same thing with the dividends that you will see later. And it invests towards the 30 companies of the SLI index. There is 389 million invested towards this ETF. It's a fully replicated type, and the past year it is up 3.53%. The past 3 years it is up 25.80%, and the past 5 years it is up 37.99%, so almost 38%. It pays out 2 dividends per year in February and in August, so this is one that is almost going to pay out its dividend for the first dividend for this year, and it has a current dividend yield of 1.69% if you calculate it out with the dividends that it paid out last year. Okay, it's not much that you will receive in February when they do the same. I think maybe they can also cut this dividend because it's really not that much that you receive, and you already need to have 5 ETFs in order to receive 1 cent. So that's actually not that great with a huge price like that, only paying out 0.0023 euros or Swiss francs. That's really stupid, I think. So they should do something about that. And here you can see the past 6 years of dividend payments giving a dividend CAGR of 14.3%. But you see here the problem, 2020 was actually quite low, so this influences this number enormously. But then 2022, you have a huge number, so when we will look at the CAGR in about 2 years, then I will calculate the 5-year dividend CAGR compared to 2022, and then it's hugely unlikely that the dividend CAGR will be positive, so then it will be negative for sure, and yeah, you don't want to see that. So I don't know what went wrong here with this ETF. Maybe it had to do with euro, but I don't think so. It's really a strange thing here, what they had going on. And then once again in 2024 you had a drop of the dividend being paid out as well. And then we can go to the third one that follows the SLI index, and that's the SMIEX from iShares. It has a total expense ratio of 0.51%. It's a German one, so it's German based. So I think they are actually mistreating the European investors here a bit, because this is just stupid. 0.51% total expense ratio is way too high. You can buy one share for 146.92 Swiss francs, and once again invest towards the 30 stocks in the SLI index. There is 503 million invested towards this ETF, and it's a fully replicated type. And if we go and look towards the performance, the past year it is up 3.47%, so actually comparable to the last one or the previous one. And then the past 3 years it is up 25.25%, and the past 5 years it is up a little bit over 37%. It pays out 1 or 2 dividends per year, and that's in June or sometimes also in December, but last year it only paid out a dividend in June, and that's 1.893123 Swiss francs that it paid out, giving a current dividend yield of 1.29%. Here you can see the past 6 years of dividend payments, and normally there are 2 numbers more, just like here, but I round them down or up accordingly, and it gave a dividend CAGR for the past 5 years of 3.87%. Then we can go to the ETF that follows the SMIM, the iShares SMIM ETF, CSSMIM. Total expense ratio is 0.45%, so once again iShares with a really high price total expense ratio. I don't like to see that, but yeah, it's up to you whether or not you invest towards this ETF or not. You can buy one share for 316.25 Swiss francs right now on the Swiss Stock Exchange. There are, in the SMIM, there are 30 holdings, so it invests towards these 30 companies, and there is 1.1 billion invested towards this fully replicated ETF. In the past year, it is up 10.50%. In the past 3 years, it is up 18.04%. And in the past 5 years, it is up a meager 14.04%. It pays out 6 dividends per year, and this in the months of March, April, May, and July. And it has a current dividend yield of 1.73%, calculated out with these dividends that it paid out last year. You can see the past 6 years of dividend payments, giving a 5-year dividend CAGR of 3.48%. And then we can go to the SPICHA following the SPI index from UBS with a total expense ratio of 0.09%. And this one comes from 0.10%. So UBS, once again, like in one of the earlier series that I made about European stocks, UBS coming through and cutting the costs a bit on their ETFs. And here it's only 0.01%, but still they do it. And that's what we like to see as investors. You can buy one share for 84.35 Swiss francs, and there are 191 companies in this ETF. So this is really broadly diversified. Okay, the first 10 holdings comprise a huge percentage of the whole ETF, but look into that and do your own due diligence. But it's always nice to really follow the whole Swiss market. There is 1.6 billion invested towards this ETF, and it's a sampling type ETF. So the ETF providers have a little bit more flexibility and don't need to follow the index percentage wise to the dot. And this is really good when you want to trade in 191 stocks on the SIX stock exchange. The past year it is up 8.52%, the past 3 years it is up 22.57%, and in the past 5 years it is up 31.56%. It pays out 4 dividends per year. It used to be 1 dividend per year, so I really like to see that from UBS. Normally they always picked February and August, but now they are really changing it up and they are diversifying their ETFs a bit more, and especially in Switzerland that's a good thing because they need to compete with CHDVD, and that one pays out 6-7 dividends per year. So it's really good for us as dividend investors that now we get 4 distributions, or 5 during the year, and it's in March, April and September, and the current dividend yield is 2.64%, and in the past 6 years these are the dividend payments that it made in total, giving a 5-year dividend CAGR of 4.15%. And then the second ETF following the SPI index, the iShares Core SPI, so the CHSPI, the total expenditure ratio is 0.10%, and you can buy one share for 159.10 Swiss francs. It invests towards 200 companies, so really nice diversification, a little bit more than the UBS ETF, but yeah, when you look at percentage wise, it's really a minimal deviation compared to the one from UBS, but it's a really big ETF. This one, it contains 5 billion that Swiss francs that is invested towards this ETF. It's also sampling type, and in the past year it is up 8.48%. The past 3 years it is up 22.6%, and the past 5 years it is up 31.8%. Pays out 5 dividends per year in March, April and July. Sometimes it's also in May, but that's to see when they pay out the last dividend payment for April. Sometimes that is then actually going ex-dividend in April and being paid out in May. And for the past dividend payments that it made, the current dividend yield is 2.65%. Here you can see the past 6 years of dividend payments, so always going up with this one as well, and it has a 5-year dividend CAGR of 3.93%. Then we can go to the SPI Mid index, so the mid cap one with 80 stocks into the index. It's the SPMCHA from UBS, total expenditure ratio of 0.25%, and you can buy one share for 124.82 Swiss francs. So 80 companies, I already mentioned that, and there is 669 million Swiss francs invested towards this fully replicated ETF. The past year it is up 9.07%, the past 3 years it is up 17.3%, and in the past 5 years it is up 15.9%. It pays out 1 dividend per year, and that's in September, and it has a current dividend yield of 1.94%. And if you look at the past 6 years of dividend payments, once again, it's really nice. Only the past 2 years it's actually going down slightly, and this reduced the 5-year dividend CAGR to 3.17%. And then we have the SPI ESG ETF. So with the ESG norms that are applied for selecting the SPI, the SPI stocks that are maintained in the index, total expense ratio is 0.12%, and it's a new one from this year, and you can buy one share for 3.6725 Swiss francs. So really nice that it's so cheap, because then investors that don't have a lot of money to invest towards shares can buy more shares and have less money left over. You know my principle, less overshoot is always good. So when you invest or can only invest with this number about 36 Swiss francs every month, then you can almost buy 9 shares. But from all the rest, you can't buy any shares. So yeah, if this ETF is available in a ETF savings plan on the broker that you chose, then perhaps this one is a good one to pick because it's a relatively cheap one. A lot of people will say, hey, the price doesn't matter. I know that. Relatively seen, the dividend yield, the performance, it's all almost going to be the same compared to the rest of the ETFs that follow the SPI index. But for people that have not so much money to invest, having less overshoot when buying an ETF is really good. And also when it costs 316 Swiss francs and you only have 200 Swiss francs to invest, then you need to wait until you have saved 2 months in order to buy one ETF, and then you still have an overshoot of 84 Swiss francs, and then it takes another 2 months before you can buy the next share. So I don't think it's that unimportant to have cheap ETFs. So this one invests towards 171 holdings. There is 1.2 million invested towards this ETF. It's not on just ETF yet, this one. So I searched it up on the website of UBS, and there the invested amount in that ETF was 2.066 billion. But I thought, hey, it's only around since the 24th of March of 2025. That's almost impossible that they already collected that much money. And they didn't, because I calculated then with the outstanding shares and multiplied the outstanding shares with the price. And then I came to a total amount invested into this ETF of 1.2 million. It's a fully replicated type, and as you can see, yeah, because it's a young ETF, I can't say much about it with the performance, but since its inception, it is up 5.1%. It pays out 3 dividends per year in March, April, and in September, and with those dividend payments, it had a current dividend yield of 1.91%. And for the 5-year dividend CAGR, I can't say anything at all. So I only have the value for 2025, and that's 0.07 Swiss francs. And then we can go to our favorite ETF, CHDVD, that follows the SPI Select Dividend Index. It's the iShares Swiss Dividend ETF, and it has a total expense ratio of 0.15%. You can buy one share right now for 179.40 Swiss francs. It invests towards 20 companies, and there is 6.2 billion invested towards it. So it's the biggest ETF on the Swiss stock exchange, following or investing towards Swiss stocks, which is quite nice. And it's also nice to know that a lot of people also agree with my wife and I that this ETF is a really good one. It's a fully replicated type, and in the past year it is up 10.91%. The past 3 years it is up 33.24%, and in the past 5 years it is up 51.56%. It pays out 7 dividends per year, and this in March, April, May, and July, and the current dividend yield is 3.49%. And the dividend CAGR is 8.31% for the past 5 years. So that's not bad at all. I believe that my wife and I, we made a really good choice when we picked the iShares Swiss Dividend. We were doubting between CHDVD and CHSPI, but we went for the dividend oriented one, because yeah, you know me, I like dividends, so that's why we went for it. And it was also full with the right stocks, and UBS wasn't in it. And UBS is paying out dividends in US dollar, and I believe that that's a wrong thing to do when you are a Swiss company. So just my opinion. And I was really happy when I looked at the composition of CHDVD that UBS wasn't in it. I have nothing against UBS because I'm a client of UBS, so you can know that. And UBS is a great bank, but I don't want to invest towards banks that much, and especially not big banks. You also know what happened here with Credit Suisse in Switzerland, so I want to avoid that as well. And Credit Suisse wasn't in CHDVD as well. And then we have the CHDIV from UBS, and it used to be the UBS ETF MSCI Switzerland IMI Dividend ESG ETF, but they changed the name. It still follows the MSCI Swiss IMI High Dividend Yield Index. The ESG is just eliminated, but actually all the rest stayed more or less the same. The total expense ratio is 0.12%, and it comes from 0.20%, so they really want to get towards the money that flows towards CHDVD, I think, because they went under the total expense ratio of 0.15% from CHDVD. You can buy one share for 13.756 Swiss francs, which I believe is once again a really good thing from UBS to put it so cheap in the market. So having a cheaper ETF, yeah, it's actually way better than a more expensive ETF like CHDVD. Now we need to know, of course, how it's going to perform in the next few years, because it's still a young ETF. It invests now towards 19 companies. It used to be 21, but now it's 19. Still only 48 million invested towards this ETF, so it hasn't gained much of attraction. It was 32 million in the previous video that I made, so in 1 year it only gained 16 million of inflows, which is actually not that great. It's a fully replicated type, and in the past year is up 5.37%. If you compare that with CHDVD, where it was more than 10%, yeah, I don't think they are going to convince investors like that. Maybe it had to do with the thing that they switched their index philosophy a bit, and they renamed the ETF to be a bit more attractive. I think UBS is making the right decision here, but we still need to see a turnaround of the performance as well. And it pays out 4 dividends per year. There they also made a change, so it was only 1 dividend per year, and now, yeah, it pays out in March, April, and in September. So they really know what they are doing. UBS, they know that they need to follow more CHDVD, and that's what they are doing. Okay, the 5-year dividend CAGR, I can't calculate it yet. And here you can also see that there is a slight drop in 2025. So maybe, as I said, maybe it has to do with the fact that they changed their index philosophy a bit. The dividend yield is just the same as CHDVD, 3.49%. So there they are already in the right direction. But yeah, CHDIV needs to convince me more in the coming years. And then the last one of this video, the ESGen SDG Index ETF, the Swisscanto ETF, that is SWCSS, total expense ratio of 0.35%. You can buy one share for 10.488 Swiss francs. So once again, a fairly cheap one, but once again, it only invests towards 11 holdings, and no, that's not correct. I knew that something wasn't right. It wasn't 11, it's 61. So on the Just ETF website, it isn't given how many holdings it invests towards, but on the site of Swisscanto, you can look this ETF up, and then there it says on the PDF that you can download that it invests currently towards 61 companies. There is 77 million invested towards this ETF, and it's a sampling type. So once again, it's a fairly young one. It is from the same age as the other one that started in 2025. But this one is up slightly higher than the previous one. So that one was up 5.1%. This one is up since inception 5.4%. Pays out 2 dividends per year. Both are being paid out in April, and it was 2 times 0.05%. So the only thing that I can say right now that the total dividend was 0.10%, 0.10 cents in 2025, and this gives a current dividend yield of 0.95%. So 5-year dividend CAGR, we need to wait another 5 years for that, but that's not a problem. I will be around, hopefully you as well. And here you can see the overview of the 14 ETFs that I discussed today. And the only thing, I'm not going to go over everything. You can just pause the video and look at it. The only thing that I can say is the order in which I put the ETFs is more or less the same as last year. The only ETFs that change position is the SLI CHA that jumped over the XSLI. So there you can see that now there is 38.39% compared to 37.99%. Last year it was slightly the other way around, but all the rest actually maintained their position. And then the two new ones, the SWCSS, is on the one to last position. Okay, it performed better than CHDIV, but it's still a young one, so I rather go off on the 5-year growth rate when I order these ETFs. But look at this, 10.91% for CHDVD. It's performed the best. Also the dividend yield is 3.49%, just the same as CHDIV. So I'm really happy for my kids that CHDVD is performing really good. And with that being said, thank you for watching to this one. Please hit that subscribe button. It helps out my channel enormously. Hit that like button as well. Then my video is distributed to other people that like this kind of videos. And thank you for watching to this one, and see you on the next one on my YouTube channel. Bye.